Hello and welcome to another update video about Natgas. So on the Natgas chart, I want to talk about two scenarios that I'm tracking here. Obviously, I think it's quite clear that we're still in a local downtrend here, especially from that high in June. The market has not been able to rally in 5 waves, which is why I've been highlighting to you all along since we started that rally that we need 5 waves up to really fully believe that the market has bottomed here in February. You know that I've been skeptical about it for a reason, because the move down looked incomplete. It still does, yeah. And while I'm open to the idea that a long-term low could have been struck already, I mean, we are essentially close to long-term low areas for Natgas. We could have bottomed already, you know, within a substantial correction, which would lead to long-term rising prices. However, I need that first 5-wave move up, and that hasn't happened yet. And it won't happen, well, it won't be a 5-wave move. If we now make another high, then it's a larger 3-wave move. That can always happen. It's just not expected, okay? Because I just need a 5-wave move from an analysis point of view in order to confirm that we have bottomed. Or we have to remain skeptical. Also due to the context of this chart, I talked about that extensively in previous updates. So I'm tracking two scenarios which point to further downside, but it's always important to have a level that keeps us safe. So the key level of invalidation for these two scenarios I'm going to tell you, that's the top of wave 4. And that is the $3.15 level. Yeah, it might be slightly different on one of your charts, because it depends on which Natgas chart you're looking at. But yeah, this is the key level. Against this level, we can look for lower prices, given that the price has failed to form a 5-wave move up. So we broke below the 61.8 retracement of the rally. We already saw that a week ago or so. But what was so far not very clear was whether the wave 1 had bottomed or we get another extension of wave 1. Well, we get at least another extension of wave 1. So we have to talk about what this means. The trend line that we talked about has kept the price down. Now, we just talked about levels or parameters that keep us safe. So for anybody who's been shorting, who's been tracking this downtrend with me, with this trend line, as long as we don't break the trend line, you know, we just go down with the trend. I mean, it's beautiful. This trend is just being followed. From an Elliott wave point of view, this could be a wave 1 of a larger 5th wave to the downside. Now, it is getting quite long. So at some point, we have to say we might already be in the 3rd wave. The thing is, when you don't have any, let's say, rally that gives us a clear, let's say, strong corrective bounce, it's difficult to say where the wave 2 was. I mean, I can tell you that from this structural point of view, Elliott wave point of view, we could say there was a 1 here. There was a 2 here, and then 1, 2, 3, 4, 5. This was 3, 4, 5. So I can count 5 waves down if I want to. Question is, how reliable is it on a time frame like that? Yeah, but we have 5 waves down. If we get a break above resistance, I would first watch for a wave 2 corrective bounce. And the resistance area for this wave 2 is between $2.38 and $2.87. Then we can watch for a 3rd wave down, a 4th wave bounce, and a 5th wave. But already a break above $2.87 resistance would be a first indication that we've actually bottomed and that something more bullish might be going on, but it really takes a break below above $3.15 to confirm that further. So that's one scenario. Direct move down with the potential for a bounce, now that we get close to these previous swing lows and this area here where we had quite a lot of trading around $1.80, $2, and the trend line here. It is, and that's one count. The other count is that we say that this, you know, after a 3rd wave bottomed in February, this 4th wave might be an Elliott wave triangle. It might be a triangle, and I will put that onto the chart as a yellow scenario, the yellow count, but I just don't have enough evidence for it yet. A wave up, B wave, C wave, D wave, E wave. So that is how this scenario would look like. I will take it off the chart afterwards because there's no point having it on here until we see further evidence for a triangle. In a triangle also, in any wave C corrective bounce, we must not see a break above 315. So it will be very similar to a wave 2 corrective bounce. But the move down would also just be corrective and form a higher low and then another lower high. That's the difference to the white count. But I'd say we take it off the chart until we see further evidence for it, because we are very much in the beginning of a triangle, if this is a triangle. Also, the move down looks like 5 waves. In a triangle, the move down shouldn't be a 5-wave move. That's Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.